Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A reactionary bullish opening along like Mariposa yesterday after the previous session's third bearish black crow. It was reactionary on more than one level, as not just reacting to last Friday's bearish move, but reacting to the weekly key reversal down formed last week. However, we are still within last week's range. If just about. I think we're very, very close to pushing out of it. We're still within last week's range. The market moved back and closed back up and closed over the gently descending green short medium moving average, currently at 103.91. The October 23 low at 104.46 and the significant bright red neckline currently 104.70 of the small and narrow November to December 2024 reverse head and shoulders continuation pattern. Prices penetrated but did not close over the combined February and March 2017 low at 104.92, but were stopped dead, just like last week, by the overhead mauve medium moving average, currently 105.04. Now, so far today, the market seemingly basing itself on the bright red neckline extension and tackling the overhead medium moving average once more. Above this, the next resistance is the April 2017 low at 105.68. Cable, aka sterling against the US dollar. A reactionary bullish long white Mariposa yesterday after the previous session's second bearish black crow. It was reactionary on more than one level, as not just reacting to last Friday's bearish move, but reacting to the weekly key reversal down formed last week. Prices rose up and out once again from the previously mentioned dark blue mid-January to mid-February ascending wedge pattern, and that's currently 124.53 to 126.32, as well as over the declining mauve medium moving average, currently at 126.15, and the September 2020 low at 126.72. Then piercing and closing right on the next significant resistance, which was the 50% Fibonacci line of the June 2016 to September 22 move at 126.99. The market even tried up to the next 50% beyond Fibonacci line beyond that, the October 23 to September 24 move at 127.34, but faltered before testing it. Beyond this, we have the next significant resistance from the flatlining gold long moving average overhead. That's currently at 127.84. Overall, I will continue to maintain the topside primary target X at 129.15 and the secondary harder to reach target X1 at 131 even for a break up and out of the dark blue ascending wedge pattern, even though I was recently starting to view the move higher as a false break. Now, so far today, a dip down to the support of the September 2020 low before a move up to the 50% Fibonacci line at 127.34, but so far not managing to stay above it as yet. US dollar against the Japanese yen. A reactionary key reversal down yesterday, if only just, after a second bullish white soldier on Friday. Prices did move upward towards the dark blue lower bull channel line, currently at 151.68 of the breached mid-November 2024 to late February 2025 possible shallow bull channel, but pulled back from testing it properly. Now, as many of you are aware, I have had misgivings about this possible bull channel, as we haven't touched the channel lines enough times, so I've not placed any targets below for it as yet. Anyway, the move lower punched down through and closed below both the 50% Fibonacci line for the whole of the 2024 move at 150.76 and the 50% Fibonacci line of the July 23 to July 24 move at 149.61. Not far below, we have the lesser Fibonacci line at 148.68, which supported the market all last week. Now, as I've mentioned on a number of occasions previously, this region was the low. This area where we are now was the low back in early December last year. It was the only obstacle left from the market forming an early December 2024 to date rounded top pattern. We have now formed that rounded top, but we've chosen for now not to exploit it on the downside. Wait and see. So far today, prices capped by the 50% Fibonacci line at 149.61 and testing the lesser Fibonacci line again at 148.68. Now below this, we have seemingly little until a lesser Fibonacci line at 146.69 and the 50% Fibonacci line, the January 23 to July 24 move at 144.58. There's one final thing I'd like to say. We are very, very close, but we're not yet there. We're very close to making this week already a potential weekly key reversal. We need to go a little bit further down to establish that pattern, but it's very close at the moment. US dollar against the CNH, the offshore Chinese yuan. An immediate countering bullish double yesterday after the previous session's bearish harami. It was the beginnings of a follow-on higher, surprisingly immediate reaction to last week's weekly key reversal up. Now prices punched up through and closed over the combination of flatlining green short medium moving average, currently 729.93, and the bright green upper time, currently 729.29, of the late December 24 to late January 25 bearish Andrews pitchfork, after being halted there by these two resistances late last week. Now further overhead is the July 24 high at 731.13, and then limited resistance until the congestion band between 734.41 to 734.96. Meanwhile below we have the influential dark blue upper trend line, currently at 725.51, and that's of the January to March ascending triangle pattern, the extension of that. And then also the rising medium moving average, which is just above that at 726.09. There is still the possibility, though I personally doubt it right now, of looking at the whole late November 2024 action as a possible double top, Adam and Eve type. Sorry, Eve and Adam type. Now so far today, a reactionary move back down, back below the green short medium moving average and the bright green upper time and towards the rising mauve medium moving average, but we're not there yet. US dollar against the Brazilian real. A third bullish white soldier yesterday, not even yesterday, on Friday, and a follow-on higher to the previous session's bullish closing white Mariposa and earlier immediate countering key reversal up. Prices pushed up over the March 2021 high at 588.04, as well as the slowly rising mauve medium moving average, currently 590.29, and mid-December 2024 to date downtrend currently at 589.02. However, the market only managed to close over the March 2021 high. I have some doubts about the downtrend, as it is only a 2-pointer, and those points are actually fairly close together. Overhead we now have the declining short medium moving average, currently at 595.28, and the May 2022 high at 597.08. Looking below, and we still have the combination of the rising gold long moving average, currently 570.54, and the bright red breached but seemingly repaired May 24 to date uptrend, currently at 576.14. This combination had been guiding prices higher since the middle of last year. I've also, for the moment, still left target X in the 563.35 zone and the secondary target X1 down at 541.95 on my daily chart. These are the primary and secondary targets for the drop down from the large early October 24 to mid-January 25 rising expanding wedge pattern, though I am now starting to have doubts about retiring them. As a final item, it should be noted that the rising mauve medium moving average and the March 2021 high both now just above the market. Well, neither of these two were much used as supports on the market's way down, so I'm wondering if they'll be any good as resistances on the way up. As a final note, it is obviously Carnival in Brazil, so we're not seeing that much activity at the moment. US dollar against the Mexican peso. An unusual key reversal up and third bullish white soldier yesterday, after what had seen a lot of indecisive spinning top patterns prior to that. In recent days, prices had been centered around the flatlining green short medium moving average, currently at 2047.71, and capped by the September 2022 high at 2057.65. Yesterday, we saw a first clear close over both of these. Overhead, we now have the congestion area 2099.90 to 2105.01, consisting of the former being the 50% Fibonacci line of the April 20 to April 2024 move, and the latter being the July 22 high. In amongst these two is the rising bright red upper shallow bull channel line, currently at 2104.23. And that's of the early November 2024 to date bull channel, currently 23.34 to 21.0 395. Should actually put that as 2334 to 200423. Now this bright red shallow bull channel has been driving the markets, been the driving market pattern here since last year. Now so far today, well, a move higher after a hesitating attempt low, which looks now more like the market gathering ammunition for the move higher from the September 22 high towards the moving up towards the 50% Fibonacci line at 20.9990.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.